Good morning, I'm Peter Milios from the Finance News Network. Stocks tumbled on Tuesday as traders' fears around contagion in the regional banking sector returned ahead of the Federal Reserve's rate decision. The Fed's two-day policy meeting, which kicked off on Tuesday, is expected to conclude with the central bank announcing another quarter-point rate hike on Wednesday. Traders are pricing in a roughly 85% chance of a rate hike. Weighing on sentiment Tuesday was word from the US Treasury that the country may hit the debt ceiling sooner than expected. Treasury Secretary Janet Yellen warned on Monday that the US may run out of measures to pay its debts as early as June 1, earlier than the late July deadline Goldman was estimating. The Dow Jones Industrial Average fell 1.08%, the S&P 500 slid 1.16%, whilst the Nasdaq Composite dropped 1.08%. Bank shares slid, with the SPDR S&P Regional Banking ETF dropping more than 6%. Traders question the stability of the smaller regional financial institutions after the crisis that engulfed Wall Street in March and brought the end of Silicon Valley Bank and First Republic Bank. Regional banks PacWest and Western Alliance declined 27% and 15% respectively. Meanwhile, JP Chase's shares shed 1.6%, giving back some of its gains from the previous session. A day earlier, JP shares rose after the takeover of battled regional First Republic Bank. Other large banks, including Goldman Sachs and Citigroup, also dropped more than 2%. Bank of America fell 3%. Are more bank crises coming? Commercial real estate loans could spell trouble for other banks next, according to Berkshire Hathaway's Charlie Munger. He told the Financial Times that he worries about the banks that made bad loans to owners of troubled malls and office buildings. They account for about 80% of commercial real estate mortgages and 45% of consumer lending, according to Goldman Sachs. That leaves them exposed to further drops in office property values and consumer spending, which could lead to a wider credit crunch. And short sellers are looming large. Hedge funds that bet stocks will fall scored a mammoth return on First Republic's demise. By last Friday, over a third of the bank's shares were held by short sellers, and it looks like other targets are in their sights. Across the sectors, consumer discretionary was the best performer, whilst energy trailed far behind as oil prices continued to slide amid demand growth concerns. The SPY futures are pointing to a 0.6% fall. Thank you for listening.